This is based on the blog from last week regarding laser beams, fiber and industrial lasers. And specifically, we'll talk about IPG Photonics today. And they just had a recent earnings report, not a single mention of AI or artificial intelligence.
What?
Which seems like a waste. Is it boring? Does management not know how to tell a good story? Or is the business still flying under the radar? And now you're going to start hearing about IPG Photonics everywhere you go.
Not an AI company. Why are we even talking about this trash? In all seriousness, as we wrote in the blog, IPG Photonics and Light in particular, ticker symbols IPGP and LASR, are kind of in a class all to their own. We have them listed under photonics and optical IDMs, but these are not like your photonics IDMs in Coherent and Momentum and that batch of businesses. These are more like industrial lasers. Wow, look at that since last May, since the tariff tantrum. Amazing return. And Light there in green. What's going on with that one? Very much a momentum stock because they provide directed energy, weaponry, and products for defense, like drone defense or missile defense systems. That's what's going on with nLight. What about IPGP there in purple? Also a nice little bump up as of late, but by and large kind of underperforming nLight. What do they do and why is it important now? Because if they're not mentioning AI, you might think, well, it's not important at all right now. Let's pass.
Well, one of the things that they do is make lasers for industrial use cases. And this is going to take you back to a couple of weeks ago when we started talking about the industrial end market slump perhaps being over. That's again what we're talking about, back into that manufacturing and industrial inflection point, for lack of a better word. And in case you're not familiar with lasers, I have some background working with lasers in the medical field, especially in the operating room. So this is a very interesting article. This is from IPG, where it explains what types of lasers there are, how they're created, how they use this light to do all kinds of cool stuff in industrial and applications, amongst other things.
I have to ask, what did you do with laser beams? In surgery?
Mm-hmm.
Cauterizing stuff?
We did cataract removal. And so they would use the laser to break up the cataract and create little incisions to pull out the cataract. Another application for it was for ear surgery, doing a thing called stapedectomy, blasting a hole in a very small part of the ear.
And then also imaging, of course, medical imaging can use lasers. So IPG Photonics, they do have some applications in medical. That's actually one of their newer segments. The reason why they're much more broad in what they do than nLight is the laser can be tuned a lot of different ways. One can be the tuning of the spectrum itself. So is it an infrared laser or is it ultraviolet? Something else. There on the left, peak power and the frequency of the pulses of the laser. It could be continuous wave or all the way to the femtosecond pulsed laser, which is peak power.
That's what was used for cataract procedures, femtosecond pulsed.
Super cool stuff.
Yeah.
The size of the point that the laser can be a very, very small pinpoint, or they can make it a little bit bigger. There's a lot of other types of lasers like CO2 lasers, but IPG and Light specifically do these high energy fiber lasers, which we talked about already last week. But basically, you think of the light being pumped through these special types of fiber optic cables that have been doped with a rare earth element. And that's what creates this laser. And then they can focus it to the customer specification. And the applications that we're talking about here, specifically for IPG, some medical, also some aerospace and defense, but primarily all sorts of different kinds of manufacturing. And here's their revenue segments broken out here. You see the really horrible slump since the end of the pandemic in 2021, roughly 30% downturn in revenue, just a really long, slow burn, a little bit of an inflection point there at the tail end of 2025, but all sorts of different types of lasers because they can meet all kinds of manufacturing needs by tuning these lasers in different ways to customer specifications. For example, we already talked about drone defense, missile defense systems. What else?
So many things.
Industrial cutting, welding, polishing, additive manufacturing, What's the market for these? It's interesting, actually, in the world of manufacturing, one of the biggest competitors that IPG and other companies have, besides other laser module companies, is actually just good old fashioned chemical businesses, caustic stuff that can be used to polish surfaces, old welding equipment, chemicals that can treat the metal before being welded together. So a lot of chemical processes actually could be eliminated, which is obviously more environmentally friendly, but also potentially more cost effective as the laser technology gets better and improves. The cost to operate it goes down. And so, in true semiconductor fashion, this is one of those things where better performance, better cost, better yield, eventually over time continuously overtakes older ways of doing business. This is interesting because it's a lot of different form factors as well. Everything from a handheld laser to a large system, different modules that they can sell customers, and then all the way down to these full systems that include robotic automation and cobots for some manufacturing applications. And then what kind of manufacturing specifically are we talking about with this? One of the big use cases actually right now is battery manufacturing. So if you're trying to think about the manufacturing supply chain for batteries, especially grid storage, batteries could be excess energy stored from something like natural gas, or it could be solar or complementary to wind. Those battery systems need very high precision manufacturing, and laser systems are used, or in additive manufacturing. If a company needs to make custom parts for their humanoid robot, or Tesla uses these things to build some of the panels on their cars in-house rather than outsourcing it to somebody. That's the kind of stuff that we're talking about here. And this is why the manufacturing boom that Casey referenced, that we talked about a couple of weeks ago, could potentially be that inflection point for a company like IPG Photonics.
And we just have a couple charts here comparing these two, IPG on the left, Enlight on the right, total revenues and free cash flow. You can see very clearly that there has been a slump for IPG, especially in revenue and free cash flow in this most recent downturn in industrial manufacturing. And then let's take a look at their balance sheet. Both companies have plenty of cash on balance. And in the case of IPG, no debt and just a little bit of debt for Enlight.
Mm-hmm. All right. Let's run this through our sample investment thesis, because especially the revenue trend is very good over the last 3-4 years. Is this a secular growth trend? Obviously, IPG has not been participating in it. Semiconductors in general, yes, very much a secular growth trend. IPG growing slower than the average because they've been in decline. Is that about to change? It appears it might be. Sales cycle length. This is the thing with a lot of manufacturing and industrial sector assets. A lot of things in the semiconductor world, the cycle is actually very short, as you know. But for some of these industrial markets, it actually can be quite long because the companies want to be sensitive with their spending. They don't want to spend everything up front. So the sales cycle might be a long time. There might be a sustained period of investment and growth that benefits IPG. And you can see that in the long down cycle from the last 3 or 4 years. They're just barely now inflecting back to growth. So this can actually be a medium to long sales cycle for IPG if there's some real legs under this inflection point. And then in the hierarchy, do they have a niche advantage, or do they have breadth and depth to their supply chain? Definitely not the latter. A niche advantage, though, the problem with this, yes, they are the leader in certain areas in fiber lasers for industrial and manufacturing, but they do have a lot of competition. They just did have to settle with Trump Laser, which is in Germany, private company. They lost a patent infringement suit. It affected less than 1% of their sales, they say, but just a risk to be aware of. There's a lot of competition in this particular part of the market. So yes, they have a niche advantage, but they're not a dominant player within that niche either. So a couple of things to be aware of on the qualitative side. On the quantitative side, revenue growth, we already talked about. Operating margins and free cash flow margins, they would be expected to scale up much higher if the revenue returns back to growth again. And so that would feed into higher per share growth rate in the coming years if this manufacturing uptick does in fact help and benefit IPG.
Yeah, we already took a look at their free cash flow. Balance sheet is good. So let's take a look at where they are right now and what the expectation is currently with the stock price around $116, $117 per share. So for this model, we used earnings per share, which is 73 cents. And this means that there's a 67% growth rate baked in for 5 years. What do you think about that?
Yeah, how could that possibly be? You might be thinking, this is the problem with cyclical businesses. Why we always say cyclical businesses will fool the best of us, the best investors out there. It's really hard because they always look expensive. At the top of a growth cycle, they look expensive because the market has usually run the stock price up too much. And at the bottom of a cycle, they look expensive because earnings might be severely depressed at the bottom of a cycle, which is the case here for IPG. While 73 cents per share is insane, is absurd, basically the company wasn't turning much of a profit in 2025 at all. And in fact, we're slightly free cash flow negative. So 67% growth rate for 5 years, basically the market is expecting perhaps a triple digit increase in earnings per share, something like a not meaningful increase, meaning 1,000% year over year increase in earnings per share because it's growing off of a base of essentially zero, going from zero to, let's say, 10%, 15%, maybe even 20% operating margin. So we show this to you because it's important to remember that this is just one tool for doing a valuation analysis. Like all valuation analyses, it's going to be wrong. And especially in the case of a cyclical like this, it actually can really mess you up pretty good. So you might want to run this through some of those other metrics we talked about earlier. Maybe you pretend the company can reach 20% operating margin over the course of the next 2 or 3 years, and then see what the valuation would be right now based on that assumption, and then monitor the progress of the business if they deliver on that. The trick with that, though, is if you're wrong, if the assumption that they can reach robust profitability is wrong, you have probably a dud stock in your portfolio. So this is why you would want to keep positions like this very small and make the company prove it over that period of time. And then depending on your style and your needs, maybe if you think you're at the top of the cycle, you trim the position back down, take some of the profit. If it does end up being a really, really big winner, if they scale up. But there you have it. IPG Photonics. What do you think about this one?
I think it's interesting.
Another interesting high-tech manufacturing
Yeah,
business.
it's, I think, one that we should watch closely.